Welcome to Hard Dollar's E101 Estimating and Project Modeling online training course. Hard Dollar is designed to handle all phases of the construction operations management process. What that means to you is that this is a tool that can help you manage every aspect of your construction project, from initial project modeling and estimating to job execution and cross-project analysis. This course will focus on the first step in the process, project modeling and estimating. There are additional courses available which go into detail regarding job execution and reporting. Hard Dollar is a dynamic and tightly integrated solution. This allows you to perform countless what-if scenarios and immediately see the impact of those scenarios on your job. For any job, you have the ability to see the costs, pricing, resource utilization, schedule, and cash flow with minimal effort. During this course, we will introduce and explain many concepts and terms which are core to understanding Hard Dollar. These include job folder, the three primary forms, pay item and proposal, cost breakdown structure or CBS, price breakdown structure or PBS, cost item details, and pay items, resources, and target price. It is imperative that you have a firm understanding of each of these terms and concepts to ensure that you utilize Hard Dollar appropriately and get the most out of the application. You are encouraged to review these slides several times if necessary, as they form the foundation of your understanding of Hard Dollar. A job folder is an independent data structure that contains all pertinent information for a single project. The data within this job folder is considered independent because it can be changed without affecting any data outside of the job folder. Similarly, data outside the job folder can be changed without it changing the job folder. Each job folder establishes certain rules and guidelines, also known as a cost basis, that the job will be built by. As we discuss other topics, we will give examples of the type of data that is held within a job folder. The library or master data is kept in a separate database from the job folders. The intended use for the library is to be a starting point for certain portions of a new job folder. During job folder creation and setup, the user will be able to import portions of the library or master. The library will often contain data that can be used in many different types of projects or scenarios. When creating the job folder, the user will have the opportunity to select which data from the library they would like to import and which they would like to exclude from their job folder. This keeps the job folder smaller, more manageable, and ensures that the correct resources are used on each job folder. The following illustrates the way the data flows down from the library during job folder creation and data import. Other than this brief interaction, the job folder and library are otherwise disconnected. Note that much of the data that is established in each of the job folders can be reproduced for use in other job folders. The next diagram illustrates that most of the data that is used to create a job folder can easily be shared with other job folders through copy and paste or through the bid wizard. When that occurs, the portions that are copied into the new job can be optionally updated so their cost basis matches that of the destination job folders. Portions of any job folder can be copied into any other job folder, with no limit on the number of job folders that are used as sources. While more than one job folder can be used as a source on a new job, it can be a bit cumbersome to find all the sections of work from several different jobs. Because of that, it may be better to keep a single job that can act as a large repository for sections of work that are typical for certain work types. This concept is known as a storehouse job. A storehouse job does not behave differently in any way to other job folders, and it does not represent a real job or estimate. It can be used when bidding in order to expedite the process or eliminate the need to create crews, update quantities, and enter production rates. Here we illustrate the three phases of developing a proposal using Hard Dollar. These are initiate, estimate, and finally submit. Initiate includes the creation of the job folder and setup of the job folder rules. Estimate is when you define pay items if necessary, define the work plan and breakdown, and add profit and finalize the job's price. Submit entails finalizing the item prices and then submitting the proposal. Throughout this course, we will refer to three primary forms that will be used to develop an estimate and ultimately a proposal. These forms are pay item and proposal, CBS or cost breakdown structure, and PBS or price breakdown structure. The icons displayed on the screen are the same that you will see within the hard dollar application and are indicators of where to click to access these forms. You will most likely spend the majority of your time in the CBS form. In addition to these primary forms, there are several other forms utilized within hard dollar that provide information in support of the CBS form, receive output from the CBS, or both. These forms are job properties, foundation setup data, resource rate, quote, schedule, and cash flow. Each of these subsequent forms are discussed in more detail in subsequent lessons. Now we will look at each of the primary forms individually. The first form we will visit is the pay item and proposal. Initially, the form is used to establish pay items, project deliverables, or any item that the project owner agrees to pay for. Once the target price is established on the PBS, individual pay item prices can be established. Please note, the price breakdown structure or PBS form will be discussed in greater detail later. From this, a proposed price is calculated and a proposal can be created. As indicated on the previous slide, you will visit the pay item and proposal form for a couple of purposes. First, you will enter the pay item identifying information such as description, quantity, and unit of measure. You can have thousands, one, or no pay items in a job. Once the remaining primary forms have been completed, you will visit the pay item and proposal form a second time to enter each item's price. The total price on a pay item is found by multiplying the pay quantity times the unit price. The proposed or current price is the sum of all the pay items' prices. Now we return to the three primary forms. The next form we will visit is the CBS. Recall from our earlier discussion that you will spend the majority of your time on this form. The CBS or cost breakdown structure allows you to itemize and outline the costs in the job. All the categorized costs can later be used for budgeting purposes. Each row in the CBS register represents a cost item. Each of these cost items represents a work activity with cost. The costs in the CBS are referred to as the forecast costs. These are based on the truest known quantities. Next, we will take a closer look at the cost items themselves. There are two types of cost items in the CBS. A superior cost item is any cost item which has subordinates. A terminal cost item is any cost item which has no subordinates. In the CBS, it is possible to have subordinates which are also superior cost items, as illustrated here. Cost item 1.3 is a superior since it has its own subordinates. Cost items 1.3.1 and 1.3.2 are terminals since they have no subordinates. There can be an unlimited number of levels of cost items in the CBS. As this diagram illustrates, each level is designated both by changing the color and by adding decimal places. So level 1 in this example is 1. Level 2 is 1.x, and level 3 is 1.x.x. By default, the superior cost items act as placeholders for the costs of the terminal items. So as this slide illustrates, the sum of the parts equals the whole. This rule holds true throughout the CBS. There are two types of terminal items that can be utilized within the CBS. The first type of terminal cost item is referred to as a dependent cost item. This type of terminal cost item is based on other factors in the job folder and will dynamically update when those factors change. An example of this would be an overhead cost that is calculated at 5% of all direct labor costs. Whenever the direct labor costs change, the dependent terminal cost item amount will adjust accordingly. The second type of terminal cost item is referred to as an independent cost item. These terminal cost items are not affected by any other factors in the bid. The independent cost sources can use one of three cost sources to calculate its cost. An example of an independent cost item would be an item which has a detailed cost source with one labor resource and one piece of equipment, each employed for 40 hours. The cost for this item would be calculated based on the labor and equipment hours and the production that is established to complete the work with those resources. As stated previously, there are three different cost sources which can be utilized on an independent cost item to calculate the cost for that item. These are detail, plug, and quote. Detail involves employing resources or crews and establishing production in order to calculate the cost. Plug is simply a cost which is entered directly for the cost item. Quote is a cost source which allows you to apply costs as a result of awarding items to subcontractors. Although there are three cost sources, only one can contribute to the cost of an item at a time. So in this example, the detailed cost source is utilized on the independent cost item. As a result, the other two cost sources are non-utilized or suspended. If the cost source is switched to quote, then detail and plug would be suspended. Next, we will look at the effect on the cost breakdown structure of changing the cost source from detail to plug or quote. When a detailed cost source is used on a superior cost item, it instructs hard dollar to summarize the costs of the item's subordinates. Now, if we change the cost source on the cost item 1.3 from detail to plug or quote, all the subordinate cost items' costs will be suspended. The costs for those items will not be changed, but they won't contribute to the overall costs of the job, since the superior item's cost source is plug or quote, which tells hard dollar to ignore the subordinate cost item's costs. If the cost source for cost item 1.3 is changed back to detail, the cost of the subordinate cost items will once again be summarized in item 1.3. The detailed cost source on terminal items indicates that those resources will be used to break down costs on those items. Resources are the basic building blocks of the job and can be used to represent crew or procured costs. There are 7 resource types available in hard dollar: labor, equipment, rented equipment, installed material, supplies, and unique. Each of the resource types follow a set of rules that are hard-coded. These rules deal with the cost driver and the unit of measure that can be used on the resource type. In the case of labor, wage rules and shift arrangements can also be set. And in the case of equipment and rented equipment, fuel consumption can be established. For labor, equipment, and rented equipment, the cost driver is duration. So the cost is driven by how long the labor or equipment resource is utilized. For installed equipment, installed material, and supplies, the cost driver is quantity. Therefore, the cost is dictated by how much of the resource is utilized. Uniques can have cost drivers that are either hourly or quantity driven. With regards to the units of measure, labor, equipment, and rented equipment use hours as a unit of measure. Installed equipment, installed material, supplies, and unique resources can utilize any unit of measure. This chart illustrates the fact that each resource employed will have its costs associated with a specific leg of the cost category breakdown. Note that in the case of rentals, installed equipment, installed materials, and supplies, there is the ability to account for fees associated with the use of those resource types. Note also that unique resources allow you to account for costs in all legs of the cost category breakdown. So, All costs are placed in one of 10 primary categories. Those categories are labor, owned equipment, rented equipment, supplies, materials, subcontract, fees, allowance, custom category 1, or undefined total. Each of these 10 primary categories can be further expanded into subcategories as the illustration shows. Labor is further broken down into labor base, labor burden, and undefined labor. Note that labor burden can be further broken down. In all, there are 101 cost categories available for accounting for project costs. Recall from our earlier discussions that resources are employed on cost items. Those cost items may be assigned to a pay item. And any cost items assigned to pay items will produce direct costs. Those direct costs are the basis for the pay item prices. When discussing the relationship between pay items and cost items, it is important to understand that there are two approaches to setting up the relationships. The pay item setup or locked job approach works well when the pay items adequately represent the work plan. In the locked job approach, Hard Dollar will automatically create level 1 cost items that are assigned to each pay item that is created. As subordinate cost items are added to the CBS, they will inherit the pay item assignments of their superiors. The second approach to setting up pay item and cost item relationships is called the work plan or unlocked job. The method is useful when the pay items provided do not adequately represent the work plan. In this case, you have the freedom to assign the cost items to the pay item in any arrangement you select. Once again, by assigning cost items to pay items, the direct costs are established, and as we mentioned during our discussions of the locked job approach, these may be used as the basis for the pay item pricing. Remember, there are 3 primary forms. So far we have discussed the pay item proposal form and the CBS. The third form we will visit is the price breakdown structure, or the PBS. The PBS form contains quite a bit of information regarding the costs in the job. With that said, the primary purpose of the PBS is to apply the profit to your job and arrive at a target price. The target price is made up of your bid costs and the target profit that you establish on the PBS. The bid costs are separated into direct costs and indirect costs. Direct costs are those costs that have a direct relationship to the completion of the pay items. In other words, any cost items with pay item assignments are considered direct costs. Indirect costs are those which have no pay item assignments. These represent overhead costs in the job. The target profit is a summary of the direct and indirect cost markups or margin percentage which has been established for the job. Now that we have taken a more in-depth look at the 3 primary forms, we will take a look at how all these forms work together in the estimating process. Recall we have the 3 primary forms: pay item and proposal, CBS, and PBS. On our first visit to the pay item and proposal form, we establish our pay items by entering descriptions, quantities, and unit of measure for each item. Next, we go to the CBS and establish the direct and indirect costs for the job. Recall that direct costs are the costs developed on those cost items that are associated directly to a pay item. Indirect costs are any costs not directly associated with a specific pay item. Next, we go to the PBS form to establish the target price for the job. The PBS will display the direct and indirect costs that are established in the CBS. The major operation you will be performing on the PBS is determining the target profit for the job. Recall that we established our forecast quantities in the CBS. and the pay quantities, which are sometimes provided by the project owner, are established on the pay item and proposal form. These quantities are used on the proposal and in the PBS. The forecast quantities from the CBS are used for internal budgeting. Oftentimes, the forecast quantities are based off of a thorough takeoff. So, when we take the forecast quantity and multiply it by the unit cost established in the CBS, we arrive at the total forecast cost for the job. We can then take the unit cost that was established in the CBS and multiply it by the pay quantity. This will give us the bid cost. PBS, we have established our target price. In this example, the target price is $2,050. The next step is to produce the proposed price for the job. This is done by applying the direct costs, indirect costs, and profit to the pay items. Each pay item will get its direct costs. In this example, that amount is $1,800. Next, we will take the indirect costs and target profit and spread them proportionally over all the pay items. In this example, the indirect costs and profit amounts to $250. This amount is also the variance between the target price of $2,050 established in the PBS and the direct costs of $1,800 established in the CBS. Once we have done this, we arrive at the proposed price of $2,050, which is equal to the target price. The last thing we will look at is the overall work planning and proposal development process. We start with the job folder and the three primary forms: pay item and proposal, CBS, and PBS. We use the job properties form in the job folder to establish the rules for the job. This includes the work and pay rules, shift arrangements, tax rate, and which resources will be utilized in the job. Next, we go to the pay item and proposal form to establish the pay item descriptions and quantities. From the pay item and proposal form, we go to the CBS to establish the forecast costs for the job. When we are finished in the CBS, we go to the PBS to develop the target price for the job. This is accomplished by adding profit to the job and adding that profit to the direct and indirect costs which were established in the CBS. Lastly, we go back to the pay item and proposal form to perform our pricing calculations. This involves the distribution of the job's profit and indirect costs over the pay items. Once the pricing is concluded, a proposal can be generated. Please note, this is not the only process to use when working within Hard Dollar, but it illustrates one approach to interacting with Hard Dollar and the various forms that make up the work planning and proposal development module. This concludes the Core Concepts online training.